All right, so this is Mr. Donovan from Ghana. Today we are doing a recording on the pound USD, starting from the year 2020. So that we start. So here we get our buy entry. We would have put 6 pips above here. Remember, this is a new day. You get your trade here, your stop loss 26 pips below this point. This is a new day. You're not expecting price to break this low. Remember, price can also go and fall back again before going up. So that's one of this. That's one of the things that happens. So when we trade this very pattern here, we'll be expecting price to reach at least this level. So we'll take it out for break even. I'll take profit point. You can see the same, almost the same distance as we traced there. We'll be continuing. So let's take the whole pattern and see how far the price go to. Before I start retracing, so in between 161 and 261, in between, we're only concerned of that. We got that. This is our one buy entry. You can see as we trace downwards and expanding flat, as we trace downwards without breaking the previous day. Okay, the previous day's low was broken, indicating that there is a new pattern setting up. If you got into this trade up here thinking that this is the end of the pattern, then you got into trade, you get stuck in trade, get it out for break even up there. Okay. So you get this buy, you get break even, then trade, banning flag, get sell. 161. If you continue selling at 161, you run at a loss. Price crawl up to go to the previous impulsive to break the previous impulsive, indicating that there's a start of a pattern. Start to fall, you sell this, you get it down there. Take profit point 161 to 61 in between. So now this is our measurement for the pattern. How far would price go down before it starts trading in between 161 to 61? You can see price start to trade back up. Give us our running flats. You buy here. So the previous impulsive move you saw it went to the 161. Sold below this. It's a sell zone. You put your sell entry here. So here you get to sell before the pullback even actually gives you that one. So let's check. Says below. You're in a trade. All of this you're in a trade that, and you complete another sell entry below here. Now we are concerned of this. This will actually reach 161 before it start to pull back. Let's see. Okay, we got it. It's not a loss. This would we be buying? Sure. We're looking at it at A, B, and C and continue to sell. Now let's shrink price to see where we are. Okay, we have not got too far. This is just the best, and then it is just 1. We are going up for 2 and a 3 before go. So it's another buy. The previous impulse. So the last week's high also involved up here. Didn't go with. Well, we took this trade. Let's see whether it's a loss. It's a loss trade. Maybe you expect price to go to the 161 before go up, and it didn't give you 161. Looking at how small it is there. Really. So let's see how far this impulsive move continues up. Get this buy, take it, profit. Between 161 and 261, you see this candlestick, you take it out. This buy it. Let's do one out. If you didn't, you take it for a break even. I remember our last week's high has been broken. Last 3 days high also continues. We take this and that and look at this and this to be one. And this you're expecting it to go and it just reach up and start falling. If you took this buy around here, you get it for break even. Even see that as a running flat. Now remember we are in between 161 and 100% of the previous what? That move is very impulsive move. We are in between. Very smooth down. Now you have this cell, there's a cell set up here. And you are concerned how far will this go? So you are looking at this, you thought, all right, this is it. You buy here and you get it back again from break even. How far will this you be thinking it's going? It didn't go. Now you get this flag, you sold, and you get a break even. Take profit, you'll be using this. So we'll be looking at this coming up here and falling because you have A, B, and C. And meanwhile, there is what? Contracted flat. So how far did the contracted flat? Let's take the small pullback. Okay, the 161 was reached. Let's take the whole big pattern. The whole big pattern was being reached. So the small pullback was respected. Positive by some few pips. Start falling. This one, there's a small sell here. Before this, we are still in a running loss. Let's calculate this pips. Are we in a trade for that? Yes, it should be. There's a running loss. Then we get in this guy. Let's continue. Remember we are 261. To get into a buy here. Yes. Yes. More than Boko. Oh yeah. On your idea person. It's all my friend my call on it, so they supervisor no they or no until be back. My friend and be or Mesa first, yeah. I'll go up and say 2K. Okay, material. All right, so we continue. So this did not reach anywhere. Start to pull back. If you think it is your buy. Yes, Clement. Oh, emphasize you can send about for this. You can send about for this. Okay. Okay. Omo be ba G cash no why. About G 2K why? Pass enemy. Pass enemy. For 2K send me. Me 1K I want parts for why. But then for 2K ni send me. Send it 3K. Me 1K want parts for. I not what consider in calculation. All right, so we continue. You'll be expecting this to be the buy, and you bought up here. Price came down, break this low. Yes. Payment inside now. Okay. So this trade actually would have ended you in a loss, but your 161 was hit. So you could somehow, if you are not too greedy, maybe you got out in a trade there. But if you are expecting price, we under normal circumstances work with this. Alright, we'll pause this. I'll resume in a few minutes. Pause. All right. So if you bought here, you end up taking this for a break even, likely or loss, because you have stop loss right below here. If you put it right below the previous day's low, you get broke out. All right. So if you put it right below here, fine. So this pattern actually, I'm very interested. Let me snapshot it down like this. So let's move on. We get this buy, we go in, it gives us a pullback, take you out for a break even. You might be looking at this as A, B, and C, and this is going down. You sold here, you get a break even around there. Yeah, hello? Yeah, hello? Oh, are you outside? Okay, go Brekuma Junction shop, no, I. So maybe I Brekuma Junction, the other one. So, if you, so here you could get a sell here. You could manage this trade for, manage this. And the same price is always giving you a major confirmed so much entry. So with this, will give you a very confident in the sell. And if you could also buy here. There's a buy. If you don't take it out, end up with a loss. But I'm not sure due to our stop loss strategy, 26 feet below, you will get hit. These are our temperatures will be around here. And if you bought this very entry, should you be putting your stop loss at last week's low? You might. But if also you want to cut off some of the losses short, you put your stop loss 26 feet below, you get hit out because you see that this have to go and it doesn't have to go always. So didn't give you what? A bigger what? Donut. If you traded a small donut, you would get out for a loss. So at the basement here, you should be putting your stop loss right at last week's low because price can behave around here and take you out for a loss again before going up by 4 to break the last week's low. Going to go up is going to go up. So with this, you have your double bottom pattern. You have pattern at the neckline. You could be buying up there. There is a pattern there. There's another confirmed major entry here. These candlestick, hammer candlesticks, you see it. So if you bought direct from there without getting to know much of the consequences, then you find yourself in a pullback. So you get a pattern here, a running flat you buy. Remember, you are in major pattern. So here you take out your profits. So you could be ending up in trading this to get a profit of about 60 pips, double bottom. Now you're out for the double bottom. Let's see for this, go back, okay, to the 261 for this whole pattern in between 161 261. The whole question is, will I get into this sell? I'm not sure, but with this, likely. But how far would it go? I can't really tell from there when I'm trading it. So I'm not sure I'll trade it. I feel like it's going to come down, go up here, give a pattern again, like a video. Give a pattern again, continue. So we didn't expect this. Let's go and check the bigger pattern, what's really going on. All right, this is how price has been moving so far. So interesting. Let's go forward. Now you get this pattern, you have A, B, and C. The question is, will you be selling this? No, I will not advise. But all the same, last week was what? Around last week's low was around here. Then there is a buy entry here for A, B, and C pattern. So without patterns, we can't trade. Without pattern, there is no entry. Without pattern, there is no stop loss. Without pattern, there is no need to trade it. So you'll be expecting, all right, this is the end of it. This should go and it fell one more down, just like the what? This very one. Where you thought this should go and it fall one more one, take you down for those. So you should just know where to put your stop loss. You buy and trade comfortably. Then it fall one more down. Now your stop loss, you are 26 pips below this very pattern. 26 pips. So unfortunately for us, with this very one, our stop loss did not get hit. Price just came down and starts what's going up. Maybe we would have been able to sell to here. We'll get it for a break even. Then you should know. Price of last week was broken. How many pips they did break last week's low? So if you put your stop loss low, let me put it at last week's low because it's just at a lower down. You break it by some few pips, about 6 pips. You have another buy entry here. So if you do so, you are in a trade. Now we have a double bottom. We are trading to at least this level. That is last week's resistance. We buy. So this is the pattern. I have a pattern here. This is what we'll be trading on. Once it's to one, price came back to your entry. Then 261, yes. So you're out of the trade around 261. Move forward. This pattern. Once it's to one, you're out. Actually, a buy entry there, just as it was. Another pattern. Get a buy. So 423 exactly, you saw some pullback. Where is that 423 coming from? From the what? This very one. Up to the 423. Ended up there. Now this is closed. Can we sell this? Or we would be in this sell. But this sell is a definite one. You get that? So you saw the trend line has straight up, please. This is the tricky part about trading. So, all right, price is just respecting the trend and continue the trend upwards. And this is why it's coming. If you pull back here, you buy. Then you have seen this candlestick. So you will not be in this trade. You close it to a break even because you don't want to end up in a loss. You want this to go up, give you a pullback, then buy or put your buy entry right above here and expect 161 of this very one around here. Give you a pullback to the entry point and start going up. You don't want to. So you ended up taking this trade for a break even, but if you were able to identify this candlestick and take it for a little profit, that's also there. You get this. Now I'll take profit from that point. Where we are going to pick it from? It will be from this bottom to the whole of this. The 161 is our target. Now let's extend that one down. I already picked it. Oh, all right. It's done. It's done a long time ago. So we have 161 and 100. So we get the sell entry here. There is a sell entry there. You can get a sell entry. We get it for break even. If you bought this one, we ended up in a loss. So in between 1 to 1 and 2, say 100% price concentration. Report, you get it for loss, you sold, is a perfect sell. Now let's take the minor, see something with it. Okay, once one of the pattern was hit. Now, if you sold, there is a pullback. If you sold that pullback, you ended up on a loss. Would we be saying the losses are too many? All right, who say that? So we buy here, we will not be buying this. This pattern will be buying, this pattern will be buying what? So once it's one was the pattern was hit, and we notice there's a trend that's going to go down. Last week's high is up here. Now, if you bought this, there's first entry, second entry. Afraid the first entry is always risky. So we'll take this out for a break even, definitely. You have A, B, and C, you take that. Let it break the confirmation points. And it didn't. This will be a perfect, all right. I don't know how come. But up here, there is no entry. But here, I'm sure there's an entry. 6 pips. 6 pips, you have a break even, 6 pips, you have a break even. You could sell here, this is a good sell, another sell down there. And this is a sell. That's a neutral point, this is a more confirmed one to be in it. So if you saw this, what could happen? You saw price came back, you just go down, you can't get it for a break even. So that's break even still. Of this pattern, we say this A, B, and C at that point, and we're looking at buying. We bought here, and when we bought, did our stop loss hit, which is 26 below. No, we didn't get hit. We have this pattern. Let's know how far are we going up. So price. Okay. So here is it. If you remember very well, when we took this very one and that, the 161, we got hit. Price retrace. Break the 161 by some few pips. That's one more down again before the up. This buy between 161 and 261. I'm not sure it's exactly. Not exactly close. So we are done with that. Now you have A, B, and C. You saw price to be ending up here. And so confidently you bought direct without any confirmation point. And you remember your stop loss 26 pips below the pattern, 26 pips. We will be down here, and 1 or 4 did not break you. All these are considered. Now you get your buy entry around here, price hit. You saw that, you say, all right, let me get into trade again. I get a confirm point. Let's see. 6 pips, you're in a trade. Price came down, come and take you forward for a break even. Go up again for this one, this very buy entry here. Go up again, giving us a what? A running flat. Now we are looking at price in a certain way. We'll be in this buy again, but when it reaches, we'll take it for break even. We'll take this buy, we'll take this sell. These are all good trades. Now we know this A, B, and C price should not come and break this, or else it's giving us something else, and it didn't. Also, last week's low is right below here. So price can do anything at all. It can fall to this point, start going, giving us an expanding a new whole pattern A, B, and C. 1, 2, 3. Yeah. So if you saw this, you'll be in a loss. It's not going to do sell. You have A, B, and C running flat in between. This is a good buy. Be in it. Stop loss 26 pips below this. And still, how many days did it take you? We have first day, second day, came back again, continue the trend. I get this buy. I'm concerned using this as my take profit, and 261 will be the take profit point. 261 was hit. Would I be looking at taking profit also around here, or probably, let's say, if we take the whole pattern, the whole pullback, well, 161 was not even hit. It was up there in between 161 and 261. Now let's see what price is doing. But that is a good sell to be in it. The last pattern for this, we'll take it out for a break even. Question is, should we? Or the break, this one come and break the low, we go and going on. But we'll take it for a break even definitely. And that, so you have to be very smart at certain points. You have to open your eyes and then open your brain to learn more. If not, you'll be stuck behind, left behind, and people go away from you. So this will use 161, we will be targeting 161, and it wants more than 161 to the 261. Let's continue ranging our candle pattern, and that's it. Last week low. So price fell, there's a pattern, we saw this hammer candlestick. So there's a buy here. We would have been targeting 161 of this to the upside, actually give us a better entry, a better trade. So we would have been targeting here. And when we target that, we know, okay, this is one, a B wave, C wave, and it should be falling. But no, it has its own plan in that upward trend. So fell, came up as far, then fall back again. So there is something I will be looking at, the retracement of the fall. They didn't even hit the 161, the 261 there. Okay, the two in between 161 and 261 came to break this high, did it? That's the question. No, it didn't got close. I'm concerned about the retracement now. How far the price retrace of the previous bearish move. This will be 23.6 default, 23.6, which is there. So it was even more than 23.6, close to. All right, so the retracement of the previous move is also something. Not the same take profit point is also important. Our own is, I think, is the best. It has shown nothing really different. And we have this very nice, lovely pattern, and this lovely pattern is a loss, which is quite nice. Very disappointing, but nice. We already know this is A, B, and C, and that is expected. This we don't know how far back. We thought, okay, at least 161 will hit. But don't forget our low, last week's low is there. It can come break last week's low, giving us a pattern on the daily. Pattern on the daily will be like a running flat, which gives us a bullish move up, or an expanding flat. With those are the only common things that can happen. Well, breaking this low was not too bad. Who would I pick it with? No one down there. We can fail to this low where we have this, and that's to be a running flat, and the whole from this top to this down will be a pattern for the extension of the bullish upwards. So it's also there. We can't predict how price will move. We can try our best, but not to that much. So we can't predict it for. In between 161 and 261, price fell. Now let's look at this move. 261 was here and we're out. Let's take the whole previous move of that. It 161 hit. No, it was close. It tried it best. Now, where are we coming from with this green pattern, with this green line? All right, it took the whole the whole reversal flag. That's where one. took the whole reversal flag, and we are trading with the whole reversal flag as our flame take profit. So we bought. So even the whole reversal flag, our 1-to-1 did not hit. We have this pattern, we sold this one, we sold. There be a break even here. Did we have a chance to even break even? Stop loss 26 pips above, which is somewhere here. Break even. You can take this buy for a short time, get this sell. There's a sell here. The day opened without a wick, went up and fell. If you have this A, B, and C, and this you expect it to go up, you could get this sell right here. Another sell here. Because the top, the bullish one, you did not get an entry. There's no entry. That you did not get a trade. This one, you could get a trade for the bullish move, small profits. So let's see that at least our 1-to-1, we have so many reasons to get out of trade around here. In between 1-to-1 and 2-to-1, you had your trade. Now that is what is happening. You have a new pattern starting to form. The lows, switch lows has been broken. This is the previous week's low. There's a new week's low also here. So you see, all right, broken. Let's go. Okay, now a pattern 1 more fall to break that 2 weeks low. Broke it. So if you saw here, you made up a loss, a beautiful loss, because even 1-to-1 on that pattern was not broken. Now that is our low for the time being. This is our new. We have A wave even as there's no downwards pattern to link this at width, to link this where one width. So this is the start of the pattern. And now we were expecting the previous impulse to hit 1-to-1 and it didn't. So if you are trending up, that's what is also going to happen. So we move with it. This is a buy you can get in. The last year's previous day, this is the previous day, and the current day has broken the high. Enjoy that as it moves. Favorite, you know. Where are we targeting? 2-to-1. 2-to-1, we are in a trade, we are out of the trade. Within an hour or two, start falling, tracing. You have your candlestick. If you buy, you could end up in the loss, so you don't buy up here. Price continue going up. Now, let's look at something. Would we be expecting this to fall? Yes, that can also happen. So, what happened? So, all right, let's take this and that, and this and that. And with that, we'll be expecting price around here to retrace, but it didn't. Ended up going up. So, if you are buying, you shouldn't target too far. Now, this sell is a good sell. You should be in it. Was it the current day that it was broken or the previous days that it was broken? That's also a question. This break the previous day's high came down. Okay, the current day, the previous day's low was not broken. It was just upon from this fall. Now the question is, did 1-to-1 hits of the previous move? Yes, it did. We are closed. You have that. Price is moving roughly. This would be the perfect buy entry position. If you buy here, your stop loss right below yesterday's low. That's also good. So 26 pips below yesterday's low. And where would that take you? Around here. We buy that. You take this and that has take the profit. We saw this a running flat. Actually, you took this and that to be a running flat. You place your buy entry. Raise that profit does not. So you are in a trade even from the top one here. Trade from here also. So you have A, B, and C. Buy, stop loss 26. This you saw this. You said no. This can give you a running flat before going up. That's also the possibility you are looking at. Could that even be the possibility I'm looking at? Seems yes, it was. It has been. And this is just one. And I'm expecting one of these days, this one a pattern like this, or like this should come in where we will link this through. So I will say this and this is connected to give us a running flat. It was actually there and I didn't see it by the first pattern. The first analysis that was done, this was perfect. Perfect, you know, perfect. To this sell, this position. That means this is not the end of it. There's a likelihood this such a pullback will come in, a big pullback. Where is it? This. All right. This is a similar one of it. All right, and this very similar one. So that means this is just not just a pattern which is out of the play. So this is just a flag. In a bigger time frame is a flag, a bigger time frame flag. And it's one, and it's second one pattern, second pattern. So we have 1, 2, 3. Bring this to the last of it. We have 1, 2. Third wave. 4th. Then the 5th. And up here. That's giving us a new one. So running flat, where would we get our buy? Around here. Now the question for this day, there is no candlestick. Would this fall? Come and break this low? You don't really know. Get this buy, get this buy. So are you almost at a level, the top level? Yes, almost there. You are there. Running flats. Get your buy, get this buy. Perfect buys. On the pullback. 161 was hit. Should we take this? 161 was not close, so you know your choice. You should take profit. It fell. Did it break yesterday's low? No. Continue trending up. Can we get this buy? Yes, we did. This buy, break even. No, the break even is still being a trade. You can get it here. Go to this position. So this buy will be buying, thinking that yes, this is the pattern, and that's it. We bought, you saw how price was doing here, you should get it out for break even. You take this one running flats. So I should snapshot this. This looks beautiful. I have to analyze it and look at it well. So there is a pattern here. We bought, and it ended up in a loss. 30 pips, enough. We get in break even. Could we? No, we can't. We can't do that because if we got in upon this candlestick on the second candlestick, it starts falling down. Get out of hand. Last week's. So you can see last week low has been broken. The numbers of loser price will come here and continue going up if price is not going to what? Fall. So get this buy 161, you get it out. This sell is a perfect sell you should be in. Between 161 and 261, short price starting to come back in and take it for break even. If you did not put your trade in break even during the close of the week, then you can see price just came in with a gap like that. You get it. Probably you could get it, yes, yeah, don't get it for break even. Came in with a gap and take you out. Yeah, continue trending up for the what? Continue trending up for a loss. If you saw this, thinking this A and that and this should fall, then it's a loss. Get it buy, get that buy. Now remember we are in a current line week. This is the current week, indicating a new pattern. The current week line, the previous week's high also are all important. Highs break the last previous 2 weeks high, start to pull back, giving us a running flat here without breaking this week's low. This is a new week here. Came down to break this week's low, 1 week low, not 2 weeks, only 1 week. Came down to break this very current week and start going up. Alright. Now remember this is our week's low and this is our high. Where are we going to be? Only in the tiny ones. I don't really get a pattern. So this hits almost the 1 which was perfect. Getting trade to this position is perfect. Then it starts to pull back. Okay, let me sold. We saw down, right? This very one is not just there. Going to fall. We're running flat. Get a buy. Now it's been a while. I'll take we have the price. The price is just ranging within a certain what channel. You can start up here. Not really. Not. Fell to the 161. Now we are concerned about the week's low. Are they being broken? This week was not broken. This did. Price came close without breaking that week's low. Already it was in the bearish move, so we didn't continue. Continuing up, we would have taken this and that, and this should be the pattern. We saw that bigger things were in. So this is the week's low, the current week's low, and this by one. So there are several weeks showing up. So this patterns sell. They thought this is going and it didn't. One more fall. Take profit for that. 161, you're out. So you know at least this level must be respected. If you get this pattern and you continue to be buying up here, 26 pips, you will be in a loss. Loss trade this and loss trade loss. So we got this sell, should be in that sell too. You'll be thinking about managing, or but hopefully that singular move for this will take you for a break even. If you were still keeping, okay, here you take it for break even and price came up, profits price came up, give you one more down before going up. So recording in progress again. So this low, and now we are in a new week. This very new week low also here. Price has traded fall to this position. Where did it go? 161, 261, or which ones? Alright, 261 was respected at 161, price retraced, 261 also retraced, breaking this low, this high. Now we have to be watching price. Which edges price is going. Just watch. We have this double top. You sold here a pattern. You sold here, here, not a perfect wire of a double top. A double top at this very candlestick time frame, we do not place trades. So let's see, at that time we got an entry, no entry still. So at this time we don't place trade. Price went up, so we sold one entry here, can be here. Before the original confirmation here is also risky that we take it, sell it. Where did we reach? Was to one of it was what hit. How many candlesticks did they take out? How many hours? Only 1 hour. Only 1 hour. The best price you have got that you could sell here. Now let's look at the previous week's low has been broken. Last 2 weeks low also there. Last 3 weeks low also there, not broken. Now after breaking last week's low, price retrace up. We just put a stop loss and entry here. And what price to go here? Confirmed point, neutral entry point, blind zone. Second, yes, yes. Third party, all right. How much? Ask the person, what name did the person use to send the money? And customer send an ED, why? You cannot send this Canadian. And I say, any shop we pen I send this master number and couple be why? Catch it why? Now, this is it. We have one, we have a running flat here. Go buy that up here several hours, get it out. Then price retrace downwards. I will be looking at buying above the candlestick, the very candlestick, or the continuation of that bullish candlestick we put. Then the original buy entry up here. If this very first one gets you into trade, yes, got you. Then several hours before going up, which is the next day, get this buy. Now this is our take profit point from here to there. So 261. So at here you saw that price was doing that. Price can just still fall. Nothing can happen by continue. 261, you get it. Now let's delete some things. This is our, let's delete some certain things. This is our new high for the week, low for the week. Get that buy. Yes. 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 Catching is a Chinese cardinal number. Number catching is a nipa train as any the same amount. A diamond number, and any dear will be the white. Obia sending 100. Obia sending 100. Obia sending 101. No, being so sending 102. She any dear any the white. She won't be saying nipa needing. Nipa not sending any needing it saying. All right, sorry for that again. Now we are in this week. Price is trending up. These lows can be breaking. How many lows does it break? Under usual circumstance, in my previous what do you say? In my basic knowledge from learning forex trading, I got to realize that the support and the resistance, usually the pullbacks usually breaks the 2 days low. Mostly 1 day low and start going up. But the highest has been 2 days low before going up. So let's check for this. This one came down to break today's low. That day's low, is it? Then did it break the previous 2 days low? No. And it started going up. So that's how it happens. This is where one came down, then start falling, pull it for the same day, the previous day, broke the previous day low, which is the bullish. The bullish is what we are talking about. The bullish down was here and break that one and start going up. So it's like that. So here we don't get the we get the price here. So 423.6. Now where is that actually coming from? From this, all right, 423.6. Then from the whole pullback, you get twist one in between twist one and 423. So it's also there. Yes. 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 So from 2020 to 2021, in December, we are there. Now the whole entire move, even at that, got that, which was one candle, which was interesting. About this, the running flat within the candlestick, and let's still record that as interesting. Would I have been expecting this trade to be going without coming down to give us a running flat? But I would have expected this to reach here, but so upon this, I should get out. Now we have this pullback. The sell will be in this sell target point. Let's see. Okay, 1 to 1, 2 to 1. All right, there's a pull, there's a pattern sell here, sell here. We'll definitely get it out for break even around there. Selling this. All right, we have that. And this at least if we open this low, it would have been perfect before going up. Well, even the perfect patterns sometimes fail up. We have 1, 2, 3, 4, 5, then a pullback for the major what continuation. All right. So would we be by looking for a buy here? Yeah, record. We'll be looking for that buy. So if you buy here, yes, it's a loss. I will know the buy. It's not shade. Don't be shamed. So this, you saw that it's there. If you bought it here, you get it for a break even. Like the buy here, there's a loss. So I'll have to learn that. So we saw this, that this is the shoulder. We see this as the head. This is another shoulder. And we seeing the buy, we're expecting the buy. You get it? All right. If you don't get it, get out of here. So that's, if you buy here, you get the break even. Then you sell. Now you are in the sales. You are in the sales. How far would price go down? This you are expecting this to be a new what continuation of the downtrend. So even 161 was not hit. Try to pull back drastic. For that, we had in between 161 and 261. We get stuck in a trade around somewhere here now. Now you saw price retracing, you get this buy. That's one, you get your trade. Remember last week's low high is up here. You're doing your things, you know what to do. Also then, you have to remember, you have noticed that price has been trending down. Price has been given as a pattern, you know. You sold here, you get this, you should be getting it for a break even, at least here. Now you get this move upwards. That's good, that's good, that's good. Price is trending down, just a pullback. And those that bought here, can they do something with it? Not sure, not sure. The future is doomed. Yeah, damn it, it's damaged. No, you can't, you rent, you can't, so you take it for a loss. And you saw this, you got this buys, it's a good buy, but no, not with this. You can see price has come to break the low. It's new. Now I have to look at something. This has come to break the current day's low. Those ones that happen, do they go and break the previous day's low, the impulse, then the correction break the previous day's low? that. It's very important. So I might mistake it for something else. A regular flat, you sell a clear pattern in between 161, 261 until 161, pass it by some few pips. Get out. Get a pattern, you sell again. The question is how many days that you have to take it to take it break even. So 161, 261, pass by some few pips, you get it out of trade. So you get this very big pattern. You have to see how is it going. Now let's shrink. Let's just do it a bigger Fibonacci. This was that line. All right. Where's our bigger Fibonacci? Here's it. 161 was not hit. Let's take upon the last pullback. Upon the last pullback, we have 161 exactly hit. Do not be shy to take a break. Even do not be shy to take a loss. Do not be too happy to take a profit. Close it and enjoy your day. Close it and enjoy your day. So there was no entry. 6 pips below as usual, as always. No entry. You bought here. This pullback. Bought this. Why would you be in trade? All right, here. Get this buy. And they did hit 161 for you. There's a question. The previous day's low. Almost. Now let's delete some of those old patterns. So when we use the previous impulsive move, price trend almost to the 161, in between 161 to 61. So note, if you bought this, did we get a loss? 26 pips, yes, got hit out. The previous day's low, yes, also got broken. You get it? Don't get it? Get out of here. So get this pattern, you sell. Do we buy this? I will not be looking out for it to be buying that. But remember our low here, our high where are we? Our high here, which is this way one. Let's call it. Now we get this buy. You are expecting this A, B somewhere around there, and as it is falling, should give you a C. You get it? So you'll be looking for it around here pattern. Sell, sell, sell. All right. Then when we notice that all right, price are just giving us 1, 2, and 3. We'll just take it like that. Draw our trend line. Just turn price like that. Get one more sell to the down. We'll be happy for that. So the whole question comes in. One more sell to here. You get it? So the pullback, you get it? Then between 161 and 261. So we notice that all right, the price is just giving us a what? A bigger pattern. The high has been broken. Bigger pattern, this pattern. We took it. And even it didn't get to 161, start to pull back. You can see from the base, there's a pattern. How far did the base pattern reach? 261. You should expect a retracement definitely from 261. So this is where we are. We get this pattern. Let's look more into this. We get this bar, you'll be buying if you bought this upon this reversal flag, you bought it, price came down again. So you should know what to do. So if I just give you A, B, and C, and that's the B extend to the 161 years, we got it. But upwards, right? You trace goes to the level of 4, you can get this cell here. So I, so it's perfect to the same level. Get this now. Get this for a running flat. Reversal flat. Sorry. Now we are concerned about the lows and the highs of the weekly. Now last week we recorded an annual profit share of a share. So here is it. The price, even though it was up here, went up. The wicket simply went continue. So this week's low, weak, can easily be broken. So we have that pattern lesson. Our 161 was hit. Would we be buying this? Interested. Selling this? Interested. A, B, and C. Go back to the shopping on that. See the 161 on the shopping hit. 161 hit. Go back. Give us a pattern. How far would we be expecting this to go? Okay, 161 was hit. No problem. Get this pattern, we sell some, we saw that buy, we expect this should go, and we didn't. Came down to almost the same level of our buy entry. We should be taking profits. And that's making the take you out for break even. Meanwhile, you're making about 90 pips for trade with this buy. So this is where one price is repeating again. 261, we should be out. This 261, get out. Got out, then if you buy this, you end up this is a perfect sell, and start selling up there. So let's see, can we get a trade? There's a loss trade. Last week's low, don't forget, is up here. And the weeks, putting it up there. Here. For how many days? Start getting a buy it up here. Would we have considered this and that to be our running flat and a complete of it? Yes. I just came to the same level, did it? Bring the level again, start going up. So like we connected the dots. Okay. So starting the new week, the new week, there are certain questions to ask. The new week, write them down. Question you will ask is, where is the book? Question you will ask first, would be getting to start a new day entry. The first question is one. Will last week low or high be broken in this week, and price continue to trend up or fall. So, and price will continue to trend up yet or trend down as from its original entry point trended to. Will any day's low be breaking? And that's it. So those are some of the questions you should be asking yourself a new day. So you can get this buy also from here. I see A, B, and C. Oh, would we be getting this buy? What's so reasonable? Okay, we'll be looking at this as A, B, and C. Here should go 6 pips. We did not get an entry. We'll get a sell. So there are many tricky stuff that market is doing. You have to be aware. The price hit once to one of this. Yes, it did for you. So one more down. This one was hit. Question is, should we be looking at this as A, B, and C, and expanding flats in the running flats? Yes, it is. Interesting. I like to take a pic of this. My specimen. So you have to analyze the price very well. And then make something out of them and from it. So we continue. Not just looking at price, you have to be able to induce and the bring out the profits or the what do we call it from it. So here take profit points around there. So there. Now we are concerned about this very one. 161 hit. 161 was between 161 and 261. So I'll be saying all right, take profit around here. So I'll wait. And this. So we continue in the current day's low, last previous day's high is up there. So you expect this to be going up. This should take it to a break even, but if you couldn't, you ended up in a loss. Now there is something going on here. Of this flag, sell there. These are trades you can take opportunities of. Sell here. Running flats. This is not actually equivalent up here. You will be expecting this to be selling. So take this sell. Then we have that, which you'll be in a trade, manage it downwards. Did you get a chance to get a break even? Well, you did somehow. Then there's another buy for a reversal flag here. So flag, reversal flag here. A pick of a running flag, a pullback. Now we those are sold around here with the expecting price to fall to this point, but did not get a good appreciation. This was to one. Let's sell here. So here, even from this low, there is the profits. 161 of this hit. Low. Let's check with this. It's a hit. Okay. We can hit it for 161 week even. And from there, price is doing something. Trace back up again. It's not reasonable. No, this is actually trending in some sort of slope, not very like this. No, let's see. So you could get this sell. Even if you didn't take this, you will still get it around here. So you will trade for some days. So this, so that. It's the perfect sell entry below here. Now remember we are in the downtrend. I want to tell you that the low has been broken, the continuation has been set. With this, we would have been expecting price to be ranging buying from there. So not buying here. If you bought, ended up in a loss. There's a loss there. To be recovered. That's something else. You know? You will not expect this sell to come in. But if it fell from there, you'll be in it. You'll be in this sell. So you talk about the price has come to break the low one here, the previous days low one and two, and should start trending up, giving you a what? A running flat here. So this should go very bullish. Yes, take you out of a loss, which is also not bad. The question is the same day, then a break of the previous day slowly, slightly, be within the break of it. Break the current day, that current day, break the previous day slightly. Now we have the sell. Now where are we coming from? From our take profits. Begin from this and that, which is our what running flat. This and that. Add more sales to it. Price has been something else here. You know your fall and you're delayed roughly partly. So 1, 2, 3, 4. Really stuck in this trade. Let's see 6 break window. Not be in a trade. Not be buying this. Probably buy this, get it for breaking, we'll sell that. Now this is the week's low, the week's high. Sell. We sell here also. 161 of it hit. So sold here. It's right here. You have to put your stop loss above here. Sells. 161. 161 was hit. Percent of this. 161 was out. Get this buy. here. Remember this point actually. This one, if you didn't, you get a break-even chance here. You get a sell. There's several reasons to get reason out of trade here. Get this buy upwards or running flat. So this was also nice. A, B, and C, where it contains a regular flat at the end, then for a more sell. Yes, you are in the sell, go back, break even. Then this, got this sell. So let's back to the trade. Buy that. Don't forget the high of that, which is up there, which is the running flat high. Now remember the pattern is 423. Up is 5 position. So 161 was it, the whole pattern. Close to 161 but not. First we find, you can see, has been broken by some few pips. Okay, here it is up here. It did actually, yes it did. This week's low, let's see. Was broken. Now let's see what happens. It didn't. Price start to trend downwards. The stop loss changes the below up here. Close times, close. So take it down for break even. This is a buy. Sell what's supposed to be in it. It's a good sell, you are supposed to be in it. Double top. That's the 1 year out. So if you saw this, price went back up again to break the expanding flat high price. So wonderful. So if you put your stop loss so tight, you think you are so smart. Well, good for you. The almighty expanding flat high has also been broken again. You see, why we are concerned is this one, break this high low, go back to break this high. Then you'll be expecting, all right, done, we are done. There should be no more high. Then with 6 pips. Okay, 6 pips, no, I can't really tell. So go back again to break that high, come down again. So the mighty high has been broken again. Sell. Now what retracement are we from the previous impulsive move? Bullish impulsive move at 161 at 100%. You saw what price is doing. You saw that sell. Very take profit. Let's trade. Let's check by this 161. You saw the price retracement, the whole pattern. 161 also has been hit. I get a sell at 161. 261 has got hit. There's a sell, a 3 here. Being you could pick this tiny buys. You bought this buy, you did be a loss. 161, maybe 161 was not hit. Stop loss 26 below here. Close price bouncing back again. Yes. Yes. Yes, madam. A second. Pause the video. A second. So here is it. If you expected to sell this, you end up in a loss. Now, I don't know why you'd be expecting to sell that, maybe probably to this point. Don't be too greedy, not too petty. Equivalent one. I didn't price get stuck up there. Get your buy, you can buy up here. Okay. There's another buy set up there. We attack and start falling where we have this is A, B, and C, and before the major buy, anything can happen. But this continue upwards. So guys continue, you don't want to one anything. 1, 2, 3, 4, 5. Then this very smooth came in. Would we be expecting this to fall to come to that side where we have the bigger pattern and shrink price to describe that? Would we be expecting it? Where are we? Okay, here would we expect this to fall to this low before going up where we have this A, B, and C, and before going up? Yes, we would be expecting that. Price fell, came to break this running flat low, give us a pullback. We are buying to this high. That one there. So this were trading in that one. You'll be expecting it to reach this high. Pull back to the downwards, the pattern, sell back, buy back again up to the 161. Now, as price has come down, would we be looking to sell here? If you sold that running flat somewhere here, you are expecting price to go back up again, but it didn't. So once it's one of these has hit, here's it. This one has hit. I guess a pullback, you go for a sell, you sold here. Now you know this should be your 161 double top. That's not a perfect take profit position point. So let's look at this. This somewhere here that the running flat, then this one taking profits. See the whole impulsive move. You know, I prefer taking this. After the price go, this would have taken this as to break the so sell. We have the sell. See how far the price go. We change 261 was passed. 261 there. So afterwards, we'll be asking ourselves questions. Should we take swing trades where we be in a trade for quite a while or only a few days? So if you sell this one at what 261 exactly, where it is what 261 exactly, where it is exactly 161, that was the pattern. Since there is not even an entry, and why is this candlestick? So let me check very well. So likely it will take you for it will take you for an entry. Buy. That's 2 minutes. If you buy set up a buy up there. One of this. So as written, if you buy up there. Then there's a sell here. We wouldn't be selling, but it's well, so just put a sell. They will be selling on this. How far did it go? 261. Fine. We can't sell here because price from here can start going up. Sold 261. The price continued to 261. Let's take the whole bigger pattern between 161 and 261. a smaller pattern. So 261, so 423, close to 423. And price is what it does. You hold this, you can buy this, buy that. You know, buy this. If you bought this, likely you're in a loss. 161 exactly, price should trace. How far did it retrace? Let's see. Did it retrace to 161? Yes, 161, you got it. You can get in for that sale. This sale also. I prefer taking it from this point to the 100%. Alright. Then, price, the way we get stuck in any form of trade now, we get the buy here. If we be buying this, we will know that this is a running flat and price can get stuck for going up. We buy, there is a buy here for this. After a neutral entry, but the stop loss is below. Buy, now take profit points. Don't forget the impulse 161 traces, 61 going close. Would have been targeting 261 by changing between 161 and 261. So between 161 and 261, moving of this red one, of this bigger one also. And now we have this also. This is just on I4 side. Buying on this is risky. Don't expect this. Then maybe here from. So let's check the leaving the 161 of this one will be 8. Close, so but it will be less than the 161 will be the target point in October. Then taking target point for this 161, taking the whole flame. Not close to 161. The whole entire pattern in between 170 and 261 was 8. This year you'll be expecting it to fall. And if you couldn't break even, say one fit to swing the trade. $30 something pips from there. Then this trade, so let's 261 close to 261. Let's see this also. 161. So we would have taken this, that, and this. In the meantime, then we saw this pullback again. This back. 161 was 8. The sell, we have sold this. So here it should be out. If we didn't, then we had these pullbacks. They all didn't take you out for break even. So good. They actually worth it. From the questions you asked. After I tried swing trades and it didn't really help me, so getting being in trade for quite a while doesn't really help me. So here with the very yes, yes. All right, Ochina eventually. We know okay. But the solid tape. Ochina mo kwa kanema or solid tape. Namo for motor wrap and namo for wrap and banning your. There we have the sell. Sell. Trace. Are we having any target point for this once? Well, we could take from this to the dot, which is double 2. Now the concern now is where are we coming from? It is from here. Look here. Concern now is to ask whether that low was looking showed close, we traced around that point. So just focus on that. Put that high, so it should be the start of a pattern. Not it wouldn't have looking it. Now let's shrink price to see how far we were from right. Low has been broken, pull back before the low was broken, it was pull back, broken again, pull back. Okay. So this is the start of a pattern. The high has been broken, the start of the pattern, we'll get a pullback again. Somewhere around there, we'll be looking at the same goal, but they are not getting it. We like to show it more. Let's put it on page 4. Where are we? Wait a second. Okay, let's go back. We're in October. Alright, so this year running flat. Where are we actually? Alright, this is very clear. It's now very clear. Running flat. So let's look at price. This the impulse button. Buy to almost 161. Came down, break this low, go up again, break it. Take profit points, remember taking it here, then go back, fall again. Should we be looking to copy such a pattern here? The impulse and the movement by. Where did it get to? 261, and this one go to 161 before falling. The pattern we have at hand. It fell. From there we are here. So there's a sell. This is the best position to take a profit. It's our way to pick it. Get it buy. So looking the low, should know something, it indicates something. We have A, B, and C. Around here start to fall. Food. Keeping this cell this. Now I'll take profit point will be taken from this point to here. From there we have 161 reach. So this sold as sold. 161 which you had a big pullback on the pattern. Go to the 261, we need to continue. Continues. So we are concerned about this very take profits. At 161. Here, if you saw this bullish move up, pattern, thought this would have gone up and you ended up in a loss. Even 161 was not hit, you can buy this for a breakable. You have to sell here. The second high has been low, high has been broken around here. Running flat for BNC forwards. In November 2021, now this and that will be linked together. We're running flat. Price has several ways of moving. I mark you how price can be. That's why people say trading is a scam. because you have to learn so many diverse ways and open your mind to so many possibilities. So buy, one asset, a sell. You're interested in this buy, if you could, if you did, not too bad. Continues. Flat. You will take the whole of that pattern or only the pullback. The pullback was the one you take it. Is it worth holding the trade? Hold the trade, the first day you get out of the trade for break even, go back up again, or you could have 2 hours to hold it for break even or the 10-year fix. Before this, if 161 gets hit before it starts coming down, no, you didn't. So the question is, where is your stop loss? 26 pips. Okay, you didn't hit. So when it's happening like that, with the question that have to do with the previous the reach low people can put your stop loss right below the desk, the meter switch low. This up there. The question is there a tick profit flame for it? Okay, to take this small flame. This would have come to break this low. You would have taken that as part of the tick of the pattern. So price reach to the 261 and start falling. All right, so we are back again. Actually, trend lines would have helped in this very analysis, but it's not taken consideration. So there is this sell setup. You sell, just this low, break, sell. Now you look at it. Where is it? Between when we break the last this low, a few pips. The question is it worth it? As you break it, 6 pips here. Put your break into break even, 6 pips around here. That should definitely come and take you to break even. But if you didn't, if you did, that means you have to break into trade here. It's a long story. And this also come and take you for a break even if you know it will go down once more. So you just have to sometimes play a fool without putting a break even. That's for the swing traders. So will we be in this trade? Yes, very likely. But I wouldn't be in a trade. But because how price is trending down, how the trend line is, that's why I will not be in that trade. This is a good trade to be in. Break even. If you bought up here, then you got a loss. Trending down. The downtrend has not yet been confirmed. Price is just coming down. Around here price it was confirmed. So take profit claim for this very one will be from here. So we have this pattern. Sell. So once one was hit, would we find ourselves in a trade somewhere here? No. Actually, we have this buy. It's a running flat there. A, B, C, a regular flat or something like this. So a second. Yes. All right, Clement has sent it to me, so I'll just forward it back again to Clement, okay? Tigo EVD. I'll get back to you on that. Use the Tigo cards to do it for the customer. You get it? Now we buy this. We are targeting the 161 of this pullback. We get it. Very small. So we will be targeting 161 of that. A year later, it ended up in a loss probably. So we need the profits. So once one of that was hit, before we start getting the pullback, get this sell, and it's a loss trade. It's a loss. We have 1, 2, 3, 4, 5 loss trade. And buy the trade. Buy. This is not really falling as so. What if you get into that trade also? Well, we will be expecting that this price should reach here. This will start going up. So probably we will be in this trade up here. This high. Probably get it for breaking 104 level, which comes to break the previous week's low. Should be expecting a buy zone. And a pattern and a buy zone. The same level. That should be in trade, out of trade. Yeah. So we are going to be done with for the year 2020 and 2021.